Hello and welcome to Hot Commodities. I'm Manisha Gupta and the top headlines on the show are: straight up, the oil minister Narendra Taneja says the crude oil prices may slip further, says the rates could slip as low to below $40 a barrel. The crude oil prices stabilized today, broke a 2-month downward trend after investors cheered the strong US economic data and Venezuela's push for an emergency meeting with Russia to boost prices. And the leading experts maintain a mixed view on the path ahead. While some believe the fall in crude prices will continue, others feel that the oil prices fell too much, too fast, and a strong rebound is on cards. And the crude oil prices stabilized today, breaking the 2-month downward trend after investors cheered the strong US economic data and Venezuela's push for an emergency meeting with Russia and other OPEC members to boost oil prices. While the oil rates posted their biggest one-day rally in 6 years and rose over 10%, currently the prices are stabilizing on back of heightened fears of further fall. The crude prices have bottomed out or not. To discuss this and more, we have with us Jim Rogers, who's author Street Smarts, Adventures on the Road and in the Markets. We also are joined by Narendra Taneja, who's energy expert, and he joins us in Delhi. Well, despite the sharp up move in oil prices, the oil minister Narendra Taneja is convinced that prices will continue to head lower. Let's listen in.
Now, friends, the price is might be it will come below 30, below 40. May it be pleasant to listen these figures, but this is a reality. Science and technology innovation has a substantial contribution of this rationalizing this price. We can say shale is one among the brightest, shale technology is one among the brightest example of the recent past. So primary factor when we will move, science and technology innovation are bound to happen. They are bound to rationalize the oil price.
Well, that's the Indian oil minister's view on the crude prices going ahead and, of course, strategy that India perhaps should take in to make use of the falling crude oil prices. But let's go to Jim. And Jim, hi, help us understand what's happening in the oil space right now, the kind of volatile moves that we seem to be witnessing there.
We're in the process of making a bottom in energy prices. The world's reserves of oil continue to decline, except for frackers, and frackers cannot make money at $40 oil. So the fundamentals outside of fracking are in decline. So I would suspect it will make the bottom sometime this year or next, and then oil will go higher again.
Mr. Taneja, coming on as well, because the oil minister has his views on where the crude prices could be headed, and the international experts also feel that perhaps it's bottoming at $40 a barrel. What's your sense? I mean, you've been around tracking the prices and economics for the longest time.
Well, my own assessment is that probably we are heading in the direction of $40 per barrel for Brent. I mean, despite the developments we have seen over the last 24 hours, I think prices will start going down again and probably touch $40 per barrel within coming few weeks. But $40 per barrel is not sustainable. I think, probably after some time, the price will start moving northwardly again, and they will touch for $50 per barrel and probably stabilize. Let's say over the next 12 months, it's stabilized somewhere between $48 per barrel to maybe about, 58 or 59 or even $60 per barrel. Let's not forget one thing, a cost of production is going on, cost of exploration is going up, license fee is going up, and more importantly, majority of countries, including OPEC countries, they need minimum $65 per barrel just to sustain it. You see, and when I say sustained, we are not talking only in terms of exploration production cost. We are talking of all other costs involved. Countries such as Venezuela, Saudi Arabia, Iraq, Iran, they basically depend only on oil for their economic, social, political, cultural survival. I mean, it includes non-OPEC super majors such as super countries such as Russia. So the question is that if oil start moving in the southwardy direction and touch even $30 per barrel, as some pundits are saying, the question is the indirect cost for that for the global economy and particularly for big importers like India is going to be very, very high, because that would lead to social unrest across the Middle East, social unrest across Latin America, social unrest, political unrest in Russia and maybe even parts of Eastern Europe. What would then happen to the global economic stability and the global economy? Then probably oil prices will go even beyond $150 per barrel. So nobody wants that kind of scenario. And don't forget one thing now, the picture is slightly different now. G20 leadership. G20 has become a very powerful platform when it comes to oil prices. And I think G20 works, the leaders, they pick up the phone, talk with each other, and they try to find a solution. This is already happening. And for the first time, G20 Energy Ministerial is also happening in Turkey on the 2nd of October, where oil prices are actually sitting right on the very top of the agenda. So I think that there is a lot going on which is not visible on the horizon at the moment, and these forces, including OPEC and non-OPEC and G20 and others, would make sure the prices are such that they don't damage the global economy, stability of the global economy in the long run. You see, and that's what's more. In India also, if you ask me, even in India, people who understand these things, even they want prices to be in the region of $60 per barrel, so that economic and political stability in the Middle East is maintained, which is crucial for India's own economic and even political stability.
Mr. Taneja, that's a very valid point. But what's your sense? I mean, we've come off 70% from last year highs. What will another $10 make us sense as? Or do you think it really is about whether or not the lower prices continue to hold or lower?
I think at the moment, let's say for the next 4, 5, 6 months, that is what is more important, because let's not forget one thing, if the prices are where they are today, and some OPEC countries have played a big role in that, particularly Saudi Arabia. Saudi Arabia, the last 1.5 years, we all know that it's an open secret, actually have been driving prices low, so that, they basically make sure that the shale revolution in the US collapses from within, and it becomes unviable. So they have been playing their own games, but they have not succeeded. So now the result is now they have to make sure that the price is stabilized, and they have to come up with the new thoughts. Another OPEC country also have to chip in. So far Saudi Arabia has refused to do that. But when you look at the fundamentals, even of Saudi Arabia oil economy, you have started seeing cracks there, some very, very serious cracks, and nobody can afford that. Saudi Arabia going up, in any kind of flame, nobody wants that. And particularly India and China, these economies can't afford. So I think that's what's happening. So in that direction, but I think prices have to go back to 55, 60, $65 in short term in order to make sure that the price is stabilized, and the countries, including big importers like India, they can actually work out their own projections accordingly, and they can make their own internal political and economic assessments accordingly.
Well, stability is the key word clearly here. But Jim, getting you back in the conversation, what's your sense? Would you also say that the crude prices are perhaps near bottom, or do you see them declining further?
Well, when you have a big collapse like this, and you have a dead cat bounce, as we call it in the U.S., then you go back and you test the lows. We're now testing the lows. Oil may make new lows just to scare everybody.
Fair point that, Jim. Let's get in one more voice. And Roberto Aguilera, research fellow, Curtin University, now joins us on a phone line from Vienna. Roberto, hi. Always a pleasure to talk to you. What do you make of the very high volatile move that the crude prices seems to be getting into?
Hi, yeah, thanks. Well, it shows that things can happen, sometimes unexpected, especially on the supply side, when geopolitical events have some impact. Now, of course, referring to the disruption from Nigeria, a problem that's been common in the past years, but the two pipelines knocked out, and that's pushed price up for a while. But looking further ahead, I think it's very temporary, and still the outlook for prices is still low price ahead.
Roberto, apart from everything that the crude prices perhaps were reacting yesterday, including the stop losses perhaps being triggered, how would you view now Venezuela putting pressure on OPEC to get strategies to curb prices, including the non-OPEC countries too?
Yeah, they and perhaps a few of the other smaller producers within OPEC would like to see this. but it seems unlikely given that the larger, the more powerful producers are not signaling any interest to have this kind of meeting ahead of time. So it does not seem likely that would take place.
So, Roberto, what's your own sense then? What factors, fundamentals would you want to watch from here on? Because short term, of course, the prices seem to be reacting to everything. The long term still says that the demand-supply mismatch, imbalance may perhaps spill over to 2016.
That's right. In the immediate term, they react to all kinds of things, even, statements made by high-ranking authorities in producer countries or consumer countries, to the stock market, strength of U.S. dollar and so on. But ultimately, in the short term, this year, next year, in that kind of perspective, it's still the forces, the fundamentals that will determine supply. And we could be in for more of the same for price, similar to what we've seen in the first half of this year, where the support is coming from global oil consumption, which has exceeded expectations, and I think this will go on. And then prices are kept in check, of course, by expanding global oil supply. The big one there, again, is North American tight oil, which is resilient at the lower price, and likely, we don't know what's really happening, but I believe it'll continue to grow. Okay. The productivity there is pretty impressive. But then you also have OPEC rising production, and the other countries as well, Latin America and Brazil and Canada and so on. So that's what will keep prices contained.
So it's factors, fundamentals from both sides, putting a pull and a push in the prices there, and factors as well. Roberto, thank you so much for joining us and giving us a sense on that sector. So that really is the view coming in till time. We perhaps may be near bottom, but the volatility is just expected to continue from here on. With that, let's take a short break. When we come back, we'll have more leading experts. So far, they maintain a mixed view on the path ahead, while some believe the fall in crude oil prices will continue. But we'll get with more voices when we come back. Welcome back, and we're doing a special crude oil prices show here right on 80 Now. Remember, last week the prices had declined 7% and more, but this time, at this point in time, we are nearly 4 to 5% on the higher side. It has been quite a turnaround in last 24 hours on that sector. Mr. Taneja, how advantageous is it for Asia in all of these months when the prices have been declining? Do you think India, especially in the Asian countries, has been able to capitalize on that?
Well, good question. Capitalize in the sense, cheap oil is always a good news for India. But the question is that, have we really capitalized? I mean, have we really used that window when the oil prices are low? And as you know, oil plays such a big role in our national budget, in our national economy. Have we taken advantage of this window in order to carry out what we need to carry out in terms of reforms, structural changes, tax rationalization, and so on and so forth? The answer is no, we haven't done that. You see, so capitalize, yes, some more money for the government, more money for the company, maybe even consumers are enjoying it. But my own kind of view is that this should be used as a window in order to introduce big reforms in the petroleum sector, build infrastructure for the petroleum sector, try to also do something with gas pricing, maybe even partly deregulate the gas pricing, and also at the same time modernize the public sector undertakings, create an ecosystem that other companies, other international, national companies come and invest in oil and gas sector from upstream, midstream to downstream. Also rationalize taxes. Central government should reduce its dependence on the petroleum sector for taxes. Similarly, the states also should reduce. States should also actually get a little bit more active in the oil and gas sector, come up with their own visions in their, interventions, so on and so forth. Question, is that all happening? The answer is no. So yes, oil prices are low. It's good time because we import close to 80% our total requirement of oil, and with the prices low, great news for the economy. The question is, if oil prices continue to be low for long period, let's say $40 or $40 or further than that, then that will start impacting our economy in a slightly different way, because that means it would adversely impact our exports. Already, for instance, companies IT companies which are dependent on the energy sector for their orders, such as Wipro, they have already basically started complaining, and they want oil prices to go up so that their order books can start looking a little bit more healthier. And at the same time, my biggest worry, I'm going to go back to the same point, For oil, cheap oil prices means actually that Middle East in particular, which is next to us, will actually become politically very vulnerable. And that's my biggest worry. Second, Russia. Well, if oil prices are too low, Russia probably will be forced to get into some kind of political adventurism in eastern part of Europe. That might also lead to a completely different story. And let's not forget Venezuela. Venezuela is extremely vulnerable. If the prices are very low, Venezuela can also open up, and that can basically engulf the entire Latin America. So oil prices too low, good news, but even for India, if oil prices remain too low for too long, that's actually a bad news.
Very valid point there. But let's get in some more voices and, get to know and whether or not the crude oil prices are going to bounce back further from here. Joining us now on the phone line is Azlin Ahmad, who's editor, Crude Oil Market, Argus Media. Also joining us is Pervan, who's head of commodity research at ANZ Banking Group. Azlin, hi, you go first. The rebound has been quite strong in last 24 hours, but then again, it has been on lower volumes. So the sustainability really is a big question there.
To be honest, actually, probably not. I mean, we saw that the oil prices for both ICE Brent and WTI fall quite sharply over the last 1 or 2 weeks. So yesterday, there was quite a few bullish news that emerged in the market, mainly the indications that the U.S. economy was still very strong. And that added to the previous day's data that showed that U.S. crude inventories last week fell more than 5 million barrels. So I think all that, the market was looking for some bullish factors to push prices back up, and they got that yesterday. So I think that it was a knee-jerk reaction to the headline news. I don't think we're going to see prices surge from where they are now. I think we're going to see still a very volatile market, and prices could still fall over the next few weeks.
All right. Mark, getting you in the conversation as well. Are you surprised by the turn of events? I mean, a 10% jump up coming in for the crude oil prices. Did that surprise you?
Yeah, it's been an incredibly volatile backdrop. I think one of the issues in oil is that there's definitely a propensity to sell oil at the moment, with the fundamentals around supply being so negative. But the market is very sentiment-driven right now when it has been so heavily sold. So any news coming elsewhere that looks positive creates a bit of a relief rally. I think a fair bit of short covering in the market last night.
Mark, also, do you see a bottom now forming around $40 a barrel? Because while we did see a lot of seesaw coming in for this week, we have managed to hold yet again back above 40. Would you say that this perhaps is a new pivot point?
Well, I think the volatility is here to stay. I think one of the problems the market is having is it's now trying to second guess the timing around the US Fed moving on interest rates. And it really has been a difficult task because on one hand you have quite improving economic data in the US, and on the flip side you've got a deteriorating international conditions, particularly in China. So you've now got conflicting signals on when the Fed moves. That creates a lot of volatility, not just in the equity markets, but it's flowing through into commodity markets. So I think you're going to see volatility continue in the oil market, although I think the risk is on the downside for oil in the near term because of increased supply.
Azlin, just taking away that point from that Mark was making about the Fed noises that we are getting to hear, what's your sense? I mean, this weekend is the Jackson Hole meeting. The Fed meeting itself is in the month of September. How do you see that turn of event?
The interest rate hikes when the Fed implements it will probably not have a huge impact itself in the crude oil markets because the U.S. economy looks still very resilient. But what impact that any interest rate hike will have on the U.S. dollar, now that will filter into the oil market. So we'll have to see, I think, what happens with the U.S. dollar when the interest rate hikes are implemented. If the U.S. dollar does increase, then that could put pressure on oil prices and vice versa. So it will be it won't be an immediate effect, but it will be sort of like a filtering effect into the oil market.
Well, absolutely. There's so much happening in the international markets. It's getting to be a very news-driven sentiment there. But Mark, the bottom line really is, what's your sense on the downside and the upside you see in crude prices before this year ends?
I think that's exactly it. I think in the short term we see more downside. I think we go into a shoulder season where demand is particularly weak for a crude oil in the third quarter. And that means we could see further downside because it will probably trigger an increase in stockpiles, particularly in the US. But towards the end of the year, demand starts to pick up. We see the weather's cool right down. You see heating oil demand will pick up. So maybe towards late November to December, the crude oil prices should pick up to current levels. So I think we could see a $3 to $4 a barrel drop from here, but move back to current prices, maybe a little bit higher by year end.
Azlin, the same question to you as well before we let you go. What's your sense on the price levels going ahead?
Well, honestly, I mean, the short term is very hard, but longer, more medium term, we do see that the prices should stabilize going into the third quarter and fourth quarter. Northern Hemisphere winter demand should hit, and there should be higher demand for heating oil. So we still do think that ICE Brent prices will go up in the next few months and in the fourth quarter, and we still see ICE Brent around the $50 level going towards the end of 2050. So that's our view of the crude prices.
All right, Azlin and Mark, we'll let you go at that. Thank you so much for your individual views on where the crude prices could be headed from here on. Mr. Taneja, coming to you for your final comment. So that really seems to be the consensus around that near-term volatility, yes, but the downside is very limited. And by the year end, we are expecting the prices to go to 50, even 60 on the higher side. I mean, that really is a view coming across. So what's your sense then on what India should do at these current levels with that kind of projection?
Well, good question. You see, first of all, I want to say that keep an eye on China, because what happens to China, China's internal politics and also overall economy, I think is going to play a very important role what happens to the oil prices in coming months and maybe in a couple of next years. But coming back to India, I think the important thing is I think the government should set up a special committee and they should come up with some solutions very fast that how can we use low oil prices, you know, in order to bring about the reforms that we need to bring about in the petroleum and natural gas sector. And then also, I think the government should also look at very carefully, should we pass on all the benefits to the consumer? I think you should pass on the benefit. The question is, should we pass on the benefit on real-time basis, or should we basically come up with some kind of mechanism so that we can reform the sector and at the same time do things in such a way that consumer remain in a way, you know, better served for long time to come. For that is important all the tools we have got in our hand, because as you know that majority of companies operating when it comes to taking oil from the importer to the consumer are government of India company. These are all important tools for India's energy security. These are all important tools for India's oil future. So I think it's important that government basically put in some efforts and modernize these tools, make these companies world class like what China has done, what Brazil has done, what number of other emerging economies have done. And secondly, and what is more important when it comes to tax rationalization, I think government has to use this as an opportunity in order to start working in the direction of tax rationalization, engage the state government also so that it can be a kind of pan-India effort, and so that, you know, we can have the sector ultimately in 2 years or 3 years, 5 years from now, which is completely modern in terms of technology, modern in terms of exploration production, modern in terms of distribution, and also modern in terms of taxes. Yes, so here is a godsend window. Please use it.
And not just on paper, but implement it as well. So keep an eye on China and Fed, of course, short-term volatility as well. But going ahead, perhaps crude can be a good news going. And of course, India really needs to capitalize on that one is the major point coming in. Mr. Taneja, we'll let you go as well. Thank you so much for joining us with your sense on the sector. And with that, completely out of time on the show. Thank you for watching.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.